Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video here on Monday, June 13th, about 15 minutes after market close here in Jacksonville, Florida, 4:14 p.m. Eastern Time, as I bring you this video at this very moment. And today, it's no secret, a very, very nasty day in the market. And really, the last 3 days have been extremely violent moves to the downside on indices, stocks, whatever sector ETF, doesn't matter where you're looking at. There's really been nowhere to hide. And the last 3 days have been absolutely brutal and a very swift, short move to the downside, slicing through moving averages, slicing through key levels, slicing through support. So we're going to break that down. We're going to look at the indices, and we're also going to look at some fib levels that are very important on the Qs and on the S&P that we talked about on last week's podcast, but we're just going to briefly touch on that again. We saw cryptocurrency get crushed over the course of the weekend and into today. And like we see here in the what just happened, the S&P closes in bear market territory for the first time since this decline began pretty much at the very beginning of the year. So let's get into it. What just happened? Back-to-back gap downs. Like I just said, S&P undercuts the recent lows and closes into bear market territory, or in bear market territory, excuse me, for the first time here. So G6 down almost 6%, S&P down almost 4%, Q's down 4.65%, Dow down 2.79%, mid and small caps down a little over 4.5%, and 60/40 down nearly 3% here. But Grotection green on the day up 0.45% as we were hedged coming into the day and had very little exposure. Obviously, a nice to be green on a really, really nasty day in the markets. Market state, same as on Don's video on Friday, it is in correction, and the trend gauge is also going to remain the same as Don's video for obvious reasons here. Leaders, short-term, medium, and long-term, all in the bearish downtrend category, as you can see here. And until the market can start to right itself, these are going to stay that way. And obviously, we tried to have a little bit of a rally attempt over the course of the last few weeks. And starting with last Thursday, that began to fall apart. And now we're right back where we started. We're extended below the moving averages. We're pressing new lows for the year. So just poor market action and poor price action pretty much everywhere you look. So before we get to the tail of the tape, as I do in every video, let me just highlight Revere for a quick moment. And also my email here. If you have any questions, comments, anything related to this video, don't hesitate to send me an email. Ask a question, whatever the case may be. I'm happy to communicate, happy to do whatever I can. Or if you're interested in what Revere does, if you want to know more about our strategy, how or why we were green on a day where the S&P was down 4%, things along those lines, you can call or you can email me, or you can email anybody here, Merrill, Don, Dan, or Tim at revereasset.com, or you can go to our website and click this little call button right here. You can see 855-732-5932 is the number you're going to want to call. So let's get to the tail of the tape, and it was quite a tail today. So very quickly here, market state correction, headwinds remain the same, but now the big thing that the market is focusing on after that CPI number is the Fed going to have to raise rates more aggressively, meaning higher interest rate raises at these next meetings? That's something that's come into focus pretty heavily here. The odds for higher interest rate raises at these meetings has gone up pretty exponentially over the last 3 or 4 days. Sentiment-wise, put-call ratio still up there in that elevated range. Got up to around 1.4 on Friday, kind of still in that same area today, 1.34. Big spike in the VIX as expected with the type of action we saw today, up to nearly 35, up about 23%. Fear greed pulling back off those recent highs, which are in the 35 to 40-ish range, all the way back to 16 in just a matter of a few days here. Bull case obviously has failed as of last Friday, noted here. Bear case, that is what is in effect. We rally failure, broke the 21 EMA, and as you can see over here on the right-hand side, just fallen off the cliff here on the S&P 500. News, we do have the Fed on Wednesday, so something to be paying attention to. Big catalyst. Obviously, we're going to be watching this closely to see what comes out, what information is out, but that's something big on this week, or big for this week on Wednesday. Watching today, basically pre-market S&P was all around the 3,800 level. and ultimately that was broken, even though it tried to kind of hang on there for just a little bit. We'll look at that in just a second. So obviously, as you can see here, gap below 3,900, break support on the S&P 500 here. Action-wise, open down 2.5%, pretty much right at this 3,800 level. Then we break down to 3,750. Around 11 and 10 Eastern time, we squeeze up to 3813, down to 3770, up to 3800, and then we kind of trend lower into new lows by the end of the day, as you can see there. S&P, as you can see here, low for the day, 3734. So that's going to be your low. And then we battled with this 3,800 level all day, trying to get back above it, but ultimately not able to make a substantial reclaim. Anytime we did get back above that level, it was for a brief period of time, and we were right back down. So 3734, that is the low to watch. For all we know, that could get taken out real quickly, or it could not. But for the time being, this is the new low for the year on the S&P 500. Notes-wise, major down volume. 98% down volume, and this was probably about 30 minutes left into the market or into the trading day. Obviously, we did not close well, so I would assume that stayed about the same. Really, again, like I said, nowhere to hide. Pretty much every sector was red, as you can see here. Just a very nasty day in the markets. And again, on performance here, S&P opened down 2.5, closed down 3.87. G6 down nearly 6%, 60/40 down 2.82. And Grotection up 0.45% on the day, partially due to the hedge and partially due to TBT, which, as we've talked about on some previous videos, is a position we've had that goes up as the interest rates go up. So we'll look at that in just a moment too. Dollar up today, bonds down today, and all 11 major sectors red today. So portfolio-wise, we did make some moves today. We trimmed TBT, a nice gain on this position here. We sold SDS, which was our short position, for a nice gain as well. And we got stopped out here on CBX. Bottom line, S&P closes in bear territory, nowhere to hide. And that is that's really the case for today, is there was nowhere to hide. And we're going to look at that on the charts in just a moment. Declining 200-day and 40-week right here around 4437/4429. So very close to each other here. Declining 50 right here around 4180, declining 21 EMA right here around 4044. And as you can see here, just going through these support levels in a pretty nasty way here. And let's look at the intraday chart on the S&P here, just so we can get a good idea for what we kind of look like on an intraday basis. So I'm going to pull this up on a 5-minute. And you can see here, this is where we initially open around 3,800. I know we talked about this on the action, down to 3,750. And you can see we challenge 3,800 here, come back down below, challenge again, making higher or lower highs on the day. And then we sell off into the close and close right here at 3,750 on the S&P 500. So closing right at 3,750, below that key 3,800 level. Just a nasty, nasty close, nowhere to hide. Back-to-back gap downs of this magnitude, something you do not see very often on the S&P 500. So before we go through the rest of the indices, I just want to highlight two things real quick. Number one, I talked about this on the podcast. We've talked about this in general at Revere over the course of the last several months, if not longer. And that is the dollar. And the dollar was very strong today, borderline breaking out past this 2807 high from back in early May. And we talked about it on Friday. As long as this chart looks very bullish and continues to move higher like it is right now, it is going to be very difficult for U.S. equities, specifically areas like the NASDAQ 100. This is a bad thing for them to see the dollar continue to move higher, at least in the near term. And then also we have the TNX, which is the 10-year note, continuing a big move higher. As you can see, we talked about this 3% level last week in one of my videos, being a big area to reclaim and get back above. And you can see we have reclaimed that with some major conviction here, massive gap on TNX. And again, we have the TBT position that benefits as the 10-year note or interest rates have moved higher. So a big move in this space as well, or in interest rates here. So let's get to the indices here. We're going to go back to the S&P 500. Look at it on a daily. So obviously we undercut these recent lows here. And the next big fib level, so there's a big fib right here, the 23.6, excuse me, right here around 38.10. As you can see there, I'm sorry, this is the, give me 1 second, let me pull up my notes here. 38.2% right here at this 38.15 level, excuse me, I just had to check back on my notes there. The 50% retracement is just a little bit here, or not too far from where we're at now, right around 35.05. So that is the next big Fibonacci retracement below. And then similarly on the Qs, the 50% retracement level was right here at 286.82. We bounced around it and reclaimed it all in here, but ultimately coming back down below that now. The next big level on the Qs, the next big fib is the 61.8% retracement here at 258.05. So some big fib levels below now that we've kind of broken through what appeared to be support, at least back in May, no longer acting as support, as you can see. Just nasty action here. The Qs, I mean, from 310 to 275 in 3 trading days here. Obviously, we are getting extended as far as below the moving averages here. QQQ 13% below the 50-day, S&P around 10% or so below the 50-day. DIA, they're all going to basically look the same here, as you can see. Nasty day on Thursday, and then 2 gap downs here. Same situation below these recent lows, as well as getting extended below the 50-day, about as extended as it has been year to date, about 8%. So where it's at right now, and that's about as low as it's gotten for the Dow, is around 8% this year. IWM, same situation here, as you can see, not quite all the way below these lows like you saw on the S&P, the Qs, even the Dow, but still just brutal action from 190 to right around 170 here today. A very nasty and fast move down over the course of about 3 or 4 trading days here. Same situation, as you can see, just a harsh breakdown out of this consolidation across the board on the major indices. MDY, same thing, losing that 450 level, which we talked about last week, and in significant fashion now below these recent lows here. So IWM, the only one that's not significantly below the recent lows. Something to note there on IWM. And I do have the stochastics up here, and that is because I know we talked about it last week, and we saw the beginnings of a downward cross on the stochastic. You can see that has continued to take place. I know if you're looking at this, you see on all the indices, they look about like what you see here on MDY. So I'm going to take that off now as we go into the stocks here. And there's not much to look at on the good side of things. We did have USO or crude oil slightly up today, but that didn't really impact oil stocks. As many oil stocks were down 3, 4, 5, 6, 7% today. A lot of wild ranges in the oil names, pulling back pretty harshly over the last 3 days along with the market. Like I said, not really hardly any out there, any green out there to go over that's of note. Very little. Anything that was green earlier in the day that I had written down, by the end of the day had gone red. Just for example, Dollar Tree, Northrop Grumman, CF Industries. Those were 3 names that were green around lunchtime. By the end of the day, they were all red, and by a decent little bit too. So not much positive out there. So we're going to get into some of the negative and some of the most important stocks and areas of the market out there. So first, we're going to talk about gold, which did pull back today. But again, we talked about that dollar making a big move. Gold needs to respect these recent lows. This is a position that we still have, but had a big day here on Friday, coming back down below to this 170 level today. Gold down today along with the market. And I mentioned crypto was crushed. Here is your chart showing crypto being crushed. Bitcoin down roughly 20% or more today. This is BITO, the ETF. You can see we consolidated here all around this range, and then ultimately a nasty breakdown from that consolidation today. ETHE, this is Ethereum, same type of thing here, down 24%. Just brutal action here in cryptocurrency land. A lot of other cryptos have already corrected in a major way. Obviously, Bitcoin and Ethereum have too, but that is just further compounded today. Tesla and Nvidia, 2 of the bigger stocks in the market outside of your Apples and Microsofts and Googles, both down about 7% today. This is just poor action for two of the leading stocks or the most important stocks to the growth stock hemisphere. Both of these having really nasty days and similarly having nasty breakdowns from their consolidations, just like the indices. I mentioned oil's having a tough day. Like I said, nowhere to hide. This is EOG. This is a $78 billion company with tons of institutions in this stock right here, down 8% today. So although crude oil wasn't really down very much, doesn't save you from the fact that a lot of these stocks had tough days today. I mentioned we were stopped out of CVX. I'll show you that here as it went below the 50. HAL, another name in the oil and gas services space, down about 6 or 7% today, I believe, below the 50 as well. So like I said, doesn't matter that the commodity was holding up okay, crude oil, oil stocks still having a tough go of it today. Also, metals and mining having a bad day today. NUE and STLD, both of these names had tried to bounce, but again, just like the indices, breaking to new lows here. STLD looked like it might be setting up not too long ago, as you can see right in here, and just a brutal sell-off here from the 82-ish, 83 range all the way back down to 70, about a 20% pullback over the course of the last 3 or 4 days. And then obviously the high beta names are going to get crushed on a day like today. Datadog down 10.5%, Net also down over 10%, about 12 here, as you can see. And lastly, CrowdStrike, one that reported earnings recently and had a good response, down about 9% today. So obviously nowhere to hide, like we just went through. I mean, you can look at utilities, which are down 5% today. You can look at real estate, which is down almost 5% today. It does not matter what area of the market you want to look at. It had a bad day today. Here's technology sector fund down 4.5%. So nowhere to hide. S&P 500 closes in bear market territory. And that's why Revere is in essentially pretty much all cash with the exception of GLD. We still have our VTIP, our inflation protected bond fund, and we have our TBT, a small remaining position as we trim that today, which is not necessarily related to the market. That just goes up when interest rates go up. So Revere out of the way today in Grotection, having a green day while the S&P is down 4%. And these are just the warning signs here. This is terrible, terrible price action, and that just continued today. Very extended to the downside, so a bounce not out of the question, but nonetheless, we're very extended to the downside all day today, and we're not able to muster up really any type of rally in the market. So that's going to wrap up the video today. Again, those fib levels on the Qs and the S&P that are below where we're at now. QQQ 61.8% retracement, 258.05. SPY 50% retracement, 349.12. So keep those levels in mind, and I will see you guys on Thursday's video as well as the podcast. Have a great week, everybody.